All right, we're moving on. Let's put the spotlight on Maruti Suzuki then. The company did come out with an inline set of earnings, but let's understand what is the way forward. And for this, we are being joined by Mr. Rahul Bharti, Executive Director at Corporate Affairs at Maruti Suzuki. Hi, Rahul. Good to be speaking with you, and thank you so much for your time. First up, help us with some understanding on your results, because this time your numbers have been quite good. What we see is that the margins have been quite steady on a YY basis. But Rahul, what to expect next in terms of the margin, and also if you can throw us and shed some light on the levers for the same?
The business, in terms of retail sales, in the quarter, we grew by 8.2% in the passenger vehicle segment, while the rest of industry grew by much lesser. Total industry grew by 7.2%. So that volume growth, in addition to the domestic volume growth, we had significant export growth of 38%. The total volume growth was 13%, and the net profit grew by about 12.6% in line with the volume growth. Our EBIT margin to net sales ratio was 10%, which was broadly in line with street estimates. There were some positive factors, some not so positive factors. The impacts were on account of higher sales promotion, 20 basis points, higher advertisement by 40 basis point, adverse forex by 20 basis points, and some higher depreciation by 20 basis points. So they added up to something like 100 basis points. We had positives also of about 70 basis points, 40 basis points because of commodity, and 30 basis points because of operating leverage. So net, we had about a 30 basis points fall sequentially from Q2 to Q3, but this was broadly in line with street expectations. Year on year, the EBIT margin improved by 10 basis points.
Okay, Mr. Bharti also talked to us about a segmental performance, because the hatchback segment has showed a year-on-year decline in Q3 with entry-level models facing a drop. Your mid-level models have remained flat, and the premium segment has posted growth. So while the premium segment seems to be doing well, do you foresee a recovery in the entry-level segment, or is the pressure expected to persist for some more time?
Unfortunately, the pressure is expected to persist. We still do not have a clear trend that the small cars, the hatchbacks would grow.
All right, but Mr. Bharti, we do understand that export has been one of the key drivers of the performance, and you have also commenced the Jimny exports to Japan. Now, if you can elaborate on that, and how significant do you anticipate exports in overall contribution will mean for Maruti Suzuki in FY25 and beyond? Like in percentage terms, what kind of a growth are you expecting there?
So Fronx was our first model in August 24 that Maruti Suzuki exported to Japan. In quick succession, we announced the e-Vitara export to Japan, and now the Jimny 5-door export to Japan. This is made only in India, and it will be exported to Japan. And the advantage of this is that now Japan has become the fourth largest market of export for us, if we talk about the third quarter. Third quarter exports did very well. We had a 38% growth. And in fact, it's quite interesting that a few years ago, we used to do approximately 1 lakh exports a year. The third quarter this year, exports was alone almost 1 lakh. So we are doing in one quarter what we used to do in 1 year a few years ago. And we hope to maintain on this growth momentum. And this year, we hope to close more than about 300,000 exports. And by the turn of the decade, we should be doing something like 800,000. And one model that will really help us will be the e-Vitara, which will be exported to about 100 countries of the world.
Okay, and could you tell us what is your initial sales expectations for the e-Vitara? Could you elaborate on your distribution strategy for the new vehicle? Also, if you could give us a margin outlook that you're expecting.
So the electric vehicle segment is one segment where the product certainly matters. But what matters more is the ecosystem around the product. For example, the charging infrastructure, the confidence to the customer that if the charge runs out, we are there by his side. This ecosystem will be valuable. So on the product side, our strategy was to have a bottom-up designed as an EV. And there's a world of a difference between a freshly designed EV and an IC engine converted to an EV. There are many advantages in design that you can reap in terms of structural integrity, lightweight, safety of the battery, etc. So that advantage we have in the e-Vitara. Distribution strategy you spoke about, we will be retailing it through the Nexa channel because it's a premium segment car, SUV. And of course, we will be providing a home charger. We will be providing fast chargers in about top 100 cities of India, almost every 10 kilometers. Then we would have the service on wheels, on-road assistance, just in case a customer gets stranded. They can just give a call and we'll be there to assist no matter what the reason may be. Of course, we have workshops over 1,000 cities of India equipped with all kinds of repairs or maintenance for e-vehicles.
Mr. Bharti, we do understand the big plans that you have with respect to the e-Vitara and the sales going forward. But like all other companies, Mr. Bharti, there are some of the uncertainties regarding the contribution of EVs in terms of the margin. So just wanted to understand that would EV margins not match the ICE margins for a long time is what you're working with?
That's right. It's difficult to have EV margins. The whole world is aware of the viability pressures with respect to IC engines. And that's the reason why the government is stepping in with all kinds of incentives and financial support. So EV margins will be far lower than IC margins.
A point taken, but Mr. Bharti, also help us understand what's happening on the discounting front, because the average discount stood at 31,000 rupees per vehicle in Q3. Do you believe that this number will be lower in Q4, and if so, what are the factors that would be driving this change in discounting?
It's always difficult to predict discounts in advance because they run on current market conditions. But we did have to take a small price increase of about 30 basis points on our net sales. And that was necessary because some inflationary pressures on costs had to be passed on. Of course, our first effort is to offset such pressures through internal cost reduction. So it's difficult to predict, but we hope the sales pick up on their own.
All right, and also, Mr. Bharti, while the rural sales have shown a growth of 3%, it was, I beg your pardon, while the urban sales has actually shown a growth of 3%, it was the rural segment or the sales in that geography that outperformed with a 15% growth over there. So do you expect this trend to continue, and can urban sales catch up to the growth pace that we are seeing in rural markets anytime soon?
So, of course, India is a vast country and it holds a lot of promise. So we are always hopeful that even urban sales can pick up. The current trend is that rural is doing better than urban. I can tell you that at some point of time, urban was doing negative. So that's a positive in Q3. We hope urban also picks up fast.
Mr. Bharti, before we let you go, we have to get your view on the union budget. It's just a few days away. We're counting down to it. And what are your expectations from the same? What announcements are you expecting to hear? Could something provide a fillip to the auto space?
So in the past few years, the government has done an excellent balancing task of several segments, several priorities, and it has translated to good growth. And if there is economic growth, certainly the auto industry and Maruti Suzuki benefit from it. So whatever is good for India is good for Maruti Suzuki, and we are aligned with the government on that.
All right, with this, Mr. Bharti, would like to thank you for taking the time out and speaking with us on the earnings, and all the best for the upcoming quarters. But with this, if you like this video, then like, share and subscribe to ET Now.